Good morning, and welcome to another episode of The Value of Everything. Right. Alright, let's get this show on the road. So, what's been happening last night? Was watching the news last night. Greece said no. So they wanted no more bailouts, which is a very interesting turn of events. It was sort of, the market was sort of predicting it. It wasn't actually too outside of the realms of possibility, but it definitely is something very strange. Well, not strange, but something that's a little bit dicey is going to happen right now. Shall I explain? Right, so I think it categorizes into sort of two little areas. You've got pain in the moment versus deferred pain in the future. And this is definitely going to be pain in the moment, I believe, due to the fact that a number of possible scenarios is going to counter now. Now, not to say that there's some sort of wranglings at the moment, just to say that the Greek leaders sort of made his economist resign. So that sort of opens the tables for more negotiations with the EU, but it's not necessarily a given. He believes now that he's got a better bargaining chip to go to the EU, and I think from his perspective, I don't think he really wants to. He wants the EU to give a easy ride, debt forgiveness, sign off his debts, and have a brand new start. What leader wouldn't want to have that? But I don't think he's going to get that. What he's they might just throw in a couple of little sweeteners, but I don't think it's probably going to happen. I think the sort of the drama and everything else that they've created, and now that people, like, as soon as you start sort of, I think, like, when you start winding somebody up, creating a bit of aggro, I think everyone starts to get really more intense by something. So, in that respect, I think he's sort of, even though he's done a gesture of just getting rid of the bully boy that he's been sending over, I think the whole dramatic turn of events where he's called a referendum to not agree with the EU on the bill that they passed and all those kind of things, I think it's too far gone now. Obviously, the EU leaders, they want to obviously have a centralized sort of system where one single currency, and it's a model which works. They don't want major panics in the bond markets, all those kind of things. But it's happened. And I think there's no way of getting out of this now. They've gone so far down the road, and maybe it's no turning back now. I could stand corrected, but it's going to be very interesting anyway. So what happens next? You look around in the newspapers, it's very rarely get a good report where somebody actually can depict actually what's happening to the next stage. Now, the best indication that I've got is that the Greek government, say if this is the scenario, so they do not come to any further agreement, the money's off the table and all those kind of things. The Greek government's got an instant major problem on its hands because the banks have run out of pure liquidity. They do not have enough funding on themselves to remain propped up. Even the capital controls would have to remain in place, and the 60 euros isn't enough to hold on to. 60 euros withdrawal amount is not enough to pass on a daily basis per citizen. There's just not enough liquidity in the bank. So when I say liquidity, I mean there's just not enough cash to assets, and they will basically need to be shut down at that point. And you're going to get the government doing a number of IOUs. So that's basically that's the simple term of what money is. I pay the bearer the sum of this amount. I transfer the value of this amount. So it's going to be quite interesting. Sorry, I just got a little traffic jam coming up here. So when they issue these sets of IOUs, it's obviously you're going to promise to pay somebody in the future, but you're not necessarily going to be able to pay in euros anymore. You're going to have to pay in something else, and this is probably going to be the Drachma. So when you have the this new currency which is going to be reissued, so you basically Greece is going to go out to the bond market, say, okay, right, we're going to release this new currency. As I said, predicted yesterday, I think they're probably going to stick to the Drachma, because the Drachma is probably your main sort of patriotic thing. We're the Greeks, and we're going to stick to it. Also, I believe that once these IOUs get sent out, you're going to have basically the market trying to sort of price them, and in respect of that, you're going to have this sort of system where the Greeks are going to sort of just go forward, and they're going to say, okay, well, we're going to peg our new currency, the Drachma, to the euro 1-to-1, and then the market starts to reprice it, and then it sort of dramatically falls against the euro. So I think when you had the Greeks, the Iceland get their currency revalued, I think it just dropped by about 75% versus the euro, if I understood that correctly. So you do get this massive drop in your currency if you're a Greek person, and then so this is just sort of like the instant implications from that is that any debts, say if you're a nice business and you've recently took on a load of debts in euros to purchase a few factories, you're in a whole lot of hot water, because now those debts have been converted into drachmas and they've just been devalued rapidly, and your debt has gone up by 75% on what you were earning beforehand. Now, that obviously, if you're a exporting business, you might be able to do it because you're exporting a hell of a lot cheaper. There's going to be a rampant demand for your product. because you've just been reset so dramatically. But if you're sort of an importing company and you've put up a few retail stores to sell some TVs which you've been importing, I think you're gone. There's no chance that you're going to be able to recover from something like that. And that's sort of once you shut off the business side of a country, you're really going to sort of you're resetting everything basically, and that's where there's major problems. Now, for the individual, you've got serious problems as well with regards to how much you can spend, because previously you had euros to spend, and now with this reissuance of the Drachma is you're going to have literally just sort of a currency it's just basically going to get trashed. So the government will start to shut down your bank accounts, and it will convert it into the drachmas, like for like. That really winds people up, because obviously you've just stolen the value of your currency, and so all of the savings that you've saved up over the years to purchase a house and all those kind of things, that's just been ripped off. And now you find that all your neighbours in the different countries, they're sitting there with their big euros, and you're sitting there with your drachmas. You've been saving up to purchase this large asset, and it's no longer feasible. And you're going to get these foreigners that are going to come along and start purchasing all your land and everything else. If you're on the patriotic side of things, you think, oh, I've saved up all my thing, I'm a Greek national, and now foreigners are coming over and they're stealing all my land. They're purchasing it with their euros, and I've just got this silly drachma that's not worth the money, the paper it's printed on. Pensioners. Now, this is the interesting part, because now pensioners, I don't really think a pensioner in their right mind would have really wanted to be put onto drachma anytime soon. They would have wanted to stick into euros, even though the bill was trying to sort of make a good few preventions on them. So they were trying to sort of limit the age. I think there's something in the region of 50 something, like maybe 57 or something, which you can retire, which is pretty amazing, because I think most of the West is the age is just shooting way past 65 now. So yeah, they're gonna be thinking quite hard on this, thinking what's happened here. So my euros have disappeared, and I'm now being paid whatever it is in drachmas. Now, sorry about that. The problem with this now is that you're going to get the government coming forth, and they're going to start saying, okay, well, we haven't been paying you enough recently in drachmas. It's been getting tough. And I think this is going to be quite a regular occurrence for them. They're going to start saying, hey, we're going to boost up your wages. Or your pensions. So, hey presto, they're going to come forward and give you increases. Now, once they do increases, bond market, debt markets won't like that, because they think, okay, well, this is the sign of a weak government who's, again, squandering all the money that they're generating from their tax people, and then just spending it instantly and not actually creating anything that improves infrastructure, factory operations, efficiencies, anything like that. They're just basically paying their pensioners, which is a nice thing to do, but it's not necessarily creating a stronger economy for the future. You do get subsidiary businesses which are created around like the care of elderly, but really it should be sort of natural forming rather than like private forming rather than government forming, which creates humongous distortions in people's sort of moral and financial sort of ideas of how to look after the elderly. So that's quite a harsh sort of number of things that are just going to kick in straight away. Not to mention, obviously, just if you're just a young person there. For a young person, I think it's stressful to see families and your elderly and all those kind of people in that situation, but it's not necessarily the worst thing in the world for a young person, because they're not asset rich. They're not sort of they don't own houses, they don't own any assets, all those kind of things. Hopefully they hadn't accumulated too many debts. Debts is the one interesting thing. Now if they got a debt which is with a Greek bank, then maybe they might be all right, because that just gets converted into drachmas. But if they got a foreign bank or something like that, then hey, they're in a bit of trouble as well. So yeah, so the key thing here again is to be rich in cash. If you had plenty of cash, especially those euros now that they should have been withdrawing quite a few of, then they're doing quite well. Just to mention as well, Bitcoin's just taken a little turn over the past few, like a certain segment of time. I think maybe 3-month period. I think that there's been a vast increase, maybe of something in the region of about 30%. It doesn't look on the entire curve when it went up to about $1,800, but now it's like trickling around 300 mark. But it's definitely recognizing the fact that there is sovereign crises happening, Puerto Rico as well as Greece. So that's something very interesting on the radar which is occurring there. I think, yeah, it would have been obviously very sensible for just a few of the young guys who would have been a bit tech savvy or tech ladies, just to purchase a few bitcoins and just seeing how it went. And you've got potential liquidity there as well. Obviously, on an international sort of market, you're going to have liquidity. You can make a fair few purchases now, and people would be able to happily convert those bitcoins into drachmas as soon as they come out. I'm sure they will be happy to do that. So yeah, I'm sure if you're looking at the statistics of what bitcoins can do before and after your currency's revalued, I think it's a very interesting sort of thing. The problem is obviously with the bitcoins is like, how on earth do you get hold of them? It's like you're not gonna start be able to get into cryptography or anything like that to try and work out how to do these kind of things. How do you know what is good, what is safe? How do you know if the government's going to sort of confiscate them or not, and all those kind of things? So, but it does have the sort of it does have like the ability where you can sort of keep them under wraps. The government won't necessarily be able to capture it from you. It is literally just a code which you can put onto any computer and install the Bitcoin blockchain, and then you can extract value. That code you can just memorize. You can always use that picture pattern memory sort of thing where you, for every number, you represent that with a certain symbol. And then you create a story pattern. So it can quite, with a bit of work, it can be sort of memorized in your head. So you wouldn't even need the hardware or anything else, and it just literally is just stored on your memory as a point of security. So you're just literally just keeping something of intense value inside your head, which is never really been achieved before, and there's not really. I don't think there's a very practical method of extracting that unless they've got some brilliant truth serums and all those kind of things. But I don't think it could really come to that. So, what does this mean still? So, I was out of curiosity, I was just looking at Zimbabwe and the economy and how things were going for them. And you'll never be surprised at the extents of which they will go to sort of quell certain things. Now, the government's major fight now will be inflation once the Drachma kicks in. The citizens are going to be uproar and stuff like that. And one of probably what President Mugabe did when he was in power is he banned inflation, so any companies were not able to increase their prices in accordance to how much the currency was being revalued all the time, which obviously was just impractical because the company couldn't produce it any further and all those kind of things, and they were just inflation is just a wealth extraction because you're just literally just burning out the value of the currency of the people and making them produce more with less and less. And obviously you're making them spend that money like no tomorrow. As soon as they get a drachma in their hands, they're buying something with it straight away, whether they're converting it to another currency, Bitcoin, gold, or whether they're converting it into to assets, like they're purchasing a new vehicle, land, things like that. They're just anything they can just convert the devaluing currency into. Another interesting factor that you might find is that when I was looking at details on Argentina, their actual stock market was one of the more safer areas to sort of invest when things were going bad for them. Their stock market was just in line when their currencies were getting valued. Their stock market was actually increasing in line with the actual the drops of their currencies. So therefore, stocks and futures weren't necessarily a bad thing to be invested into. So you got all of these things kicking in. The citizens of Greece, I've got this feeling that they're not quite 100% sure of what happened so quickly and abruptly and all those kind of things. I'm sure. And I always get very frightened with the nationalism sort of thing that's being pulled off by the leaders. Hey, we're being bullied, all those kind of things. I feel that that's been played much bigger than actually what's going to happen and all those kind of things. Yeah, again, I don't know whether the idea of like sort of I guess the leaders are right in a certain extent. I guess they do require debt forgiveness, writing an offs of the actual debts, but it's just they're not gonna. It's not really gonna sort of feasibly happen. They're all gonna. Everything's sort of pretty much set in stone that this is going to happen anyway. This is the way that the market works, and they're going to have to sort of manipulate their own currency. So yeah, another thing that obviously I was another important part is the debts. So the Greek government has got a shed load of debt, and it isn't going to be revalued into drachmas. It's going to stay as the original agreement to be paid in the sum of euros. So there's no wranglings out of that. So whenever you whenever they sort of issue the IOUs and the bonds to pay off this debt into the future, or to keep the money supply going. So when I mentioned the IOUs, so an IOU is basically the promise of tax extraction from the people. We're going to extract this certain level of tax extraction so that in the future you're going to be paid this sum of drachmas. Now everyone's going to say, okay, well, Mark's going to say, well, yeah, you may well be able to do that, but I think you're going to have a lot of businesses which are going to fail. You're going to have all of this and all of that, and I guess the debt that you're asking for might be worth that, but I think it's not really worth that. And therefore, if I'm going to give you these euros for drachmas, I think I should be taking this certain level of interest as risk, as basically the offset for risk. So that's the interesting sort of part, is when they start to reissue the IOUs, because that really sort of the market, which is you got the most sort of intelligent, or most of the intelligent sort of mathematicians and everything else trying to sort of calculate how the Greek government will be able to pay their debts. And it's quite an interesting sort of terms, because you've got the people scenario in all of these factors, and there's a lot of chaotic things. And not to mention, obviously, the Greek government is communist in their ideals. They're not necessarily like a free market sort of capitalist sort of company where they sort of start to lower taxes for businesses and all those kind of things. In fact, they're going to probably increase the taxes, increase the benefits, all those kind of things, which just creates administrations and all those kind of things until you're locked down in the entire economy. But you've got things going at a far accelerated pace, and the actual the ending factor of this, obviously, is that the more restrictions you put in place, the less ability that you have to govern, because you're going to extract less wealth out of the citizens, and then you can't afford to pay anything after a while, and your legitimacy sort of diminishes. People start to set their own forms of government, which it does happen. People will start creating their own bus services. People will start doing their own health services. If you've got a broken arm, you can't be seen to by the hospital. The hospital's not being paid. All those kind of things. You have to see somebody else, maybe a nurse that's not working in certain hours, stuff like that. Be able to pay her with something else that you're producing work with. There's all these little factors that come into play where people can self-govern without that. And then if the government actually just left off and they couldn't extract the wealth for a certain period of time, then you do have actually proper businesses sort of forming in its own right. But the problem with the state is that you have the military and the police with all the guns and arms and pepper sprays and batons and shields and all those kind of things. And when you're faced with that sort of scenario, when basically when you're pulled into a corner as a government and you can't extract any further wealth out of them, that's where you can raise the sword. And it's a really unfortunate terms of events, because then you've got like this battle that goes on. Both people get more entrenched, both people get weaker and more desperate as well. It's pretty a fearful situation. Yeah, but so leading back to the sort of the market, so the market is going to just sort of reprice it. It'll be interesting to just look at what is going on there for the next few days. On the other note, we have China. China's like going through increased amounts of volatility. They're just shooting up and shooting down in their markets, and they're wobbling a lot. And I did read briefly that there was some kind of they're trying to inject more stimulus into the I think it's the futures, the shares, stocks and shares markets, which is an interesting scenario because I mean, like the way that the government there just produces statistics, they just say, okay, here the economy is increased by 10% each year, and it just doesn't really sort of make too much sense unless there's been sort of like a massive improvement of efficiencies and all those and productivity around the globe, which they can sort of extract from everywhere else. Because their number one sort of their customers are literally just in a continuous decline. Say the European Union or the Americans. Your customers are just getting weaker and weaker and weaker, and yet you're turning over more and more and more. Maybe you've got some kind of domestic growth which is going on and stuff like that, but the China story is very like on a bit of a interesting path right now. Always the market sort of tends to not necessarily look at some statistics sort of lie and get manipulated, and there's sort of a lot of things that which go on different levels. It's a vested interest to sort of obviously say that you're doing very well, so the market gives you better credit, all those kind of things. But what the market usually does is when they look at productivity, they look at the electricity bills and all those kind of things, so they can tell that a country which is big on producing goods and all those kind of things, that and factory lines and all that kind of stuff, they're going to use a heap load of electricity and all those kind of things, and that's the basis of their measurement of how well they're doing. And it does tell a slightly different story, but I mean, yeah, there is definitely not a correlation between those two results, and who knows, that information can be manipulated as well. Yeah, and all that has different knock-on effects to the economy as a whole. When the volatility kicks in, people get very scared because one day your asset's worth so much, then it's worth less, and you're like, oh, I don't really fancy being involved in this anymore. I'm just going to take my money off the table for the meantime. I've had too many surprises and all those kind of things. And what sort of begins with volatility and ends with sort of panic and fear and all those kind of things. So volatility is always a sort of a scary thing for a market, especially in China. And obviously China's like it is a humongous economy now. It is the factory of the world. So when things start to go a bit dicey there, then we've got some issues. And the government there has obviously gone on a humongous infrastructure sort of building plan, increasing like railways, building sort of properties, all those kind of things, roads. Which, I mean, I think in some simple terms, it is sort of fairly sort of legitimate things for a growing country, which you may require. But the government is sort of setting what is required rather than, so they're sort of like doing all the micromanaging of what the market requires. But not necessarily the market really wants that either. So you've got a lot of so one of the things that they always want for the nation is the peasant communities to come out of the farmlands and all those kind of things and to move into the cities. But the discrepancy between the property and how much an average sort of like newly come peasant is earning is just too far. There's too much credit expansion which has occurred where one is like a black market of lending. So if you went to your standard Chinese banks, there would be certain limits and restrictions on how much wealth you could extract, credit you could extract, you'd hit a loggerhead straight away unless you had a fairly decent. I think there's something like 50% or something you require for the amount of credit to be released. So you need a 50% deposit. So it was very high anyway. So what you do is you go to the black market and you go, okay, well, I know this friend and this friend and this friend, and they know a loan shark or somebody who can provide loans. If you can do this for them, they'll be able to give you this amount of liquidity. You just need to pay them off in this amount, which is a nice large percentage. So even though like the large loans are at a fairly standard percentage rate, a rate where it can be paid off, you've got the black market or the loan shark factor. Loan shark's not a necessary thing. They're trying to provide a service. Again, this is some kind of like unregulated sort of free market which is occurring. So you've just created some kind of like humongous credit expansion which is going out of the hands of what the government can tell or see. And it's again, you've got this fight between the government and what the market sort of requires. People obviously have been getting very happy over the last 10 years of how much properties have sort of been increasing in value, but there is excess of supply in a level that has never been sort of seen before in a property market, and there's just not really any demands. People really don't need to live in luxurious condos. They value money in their pockets more than doing that. So, especially if they don't earn the actual necessary wages to do that either, people are just going to sort of say no, thank you. So with that credit expansion, you've got a lot of debt out there in the Chinese markets, and the major thing about a humongous amount of debt is that you require more debt to sort of sustain the beast. And this story's sort of interwoven everywhere which you go. With this debt, you are now going to see that if there's just a tiny change of the market, say 10% change in the asset valuations, you've got a crisis on your hands. Say that market say you've got like 10% change in your property market. Well, people are going to be like, oh, okay, well, this is not looking too great now. I've got a number of investment properties and I'm heavily over leveraged. Every single property I've purchased, I've used as collateral to get the next one and the next one and the next one. And I've got a nice house of cards, dominoes sort of situation lined up for myself. And I've made a fair decent chunk of cash, but maybe it could be sensible for me to exit at this point. Seeing that we've just had a market turn of 10%. Now, you've got obviously the play in your head, maybe it's just a little dip, maybe the government probably won't accept that, and I guess the government is on the credit expansion side of things, so that they might just sort of implement sort of different measures. But you're sitting there as an investor, and you know that if whatever your original capital that you put in asset valuations, you're worth so much. but you've got mega debts, or based upon all your assets, you've maybe got another debt which is sort of supplying your sort of living standards and all those kind of things. Maybe you've sold a few properties and made a few profits on the way and things like that, but you definitely do not want to lose your net worth. So that's sort of the glimmer of the market turning against you. You're going to be like, oh, let's get out of here. And the problem is that you haven't really got a marketplace where you can turn over that sort of money pretty quickly. So you're looking around, you're going, okay, well, I haven't got many out there. But you obviously there's always a marketplace for every price that you put out there. But you're just going to take a humongous hit to get rid of your property portfolio, and it's dependent on how much you want to sort of walk away with. Now, if you're at the start of the panic, maybe you'd be able to sort of take a hit of 20%, maybe something like, okay, well, yeah, we've made some profits here and stuff like that. I'm walking away. It's a bit disappointing, but I think I've over the past few years I've made more than 20%, so I'm happy. But then you're on the end of the curve. You need you're desperate to sell. This is the major issue, because you've got like this combining factor which is hitting you at the same time. You're having to lower the price of the housing market. Well, you're lowering the price of the house, which in turn has a sort of contagion effect on the actual housing market itself. So you're like, oh, okay, I need to go down by 40% now. This is desperate now. I just need to sort of, I don't want to just go into the red now. I've got too many debts that need to be paid. I'm just going to get out of this situation now. This market is just too dangerous for me to even be sitting in this anymore. Who knows what could go down by the next day? We could be losing 60%, 80% of my value. So say he kicks in 40%, and then the market's going, okay, well, you can like that. This is interesting, but the buyers on the market, they're struggling as well, because you've got this increased effect, even though the buyers may have been waiting to buy at some point or other. The lockdown of credit has just whacked them out of it as well. So I guess the major banks in China might not have the sort of the instant effect, but they will do a little bit further down the line. You basically like these loan sharks. They're basically going to be going around saying, "Hey, where's my installment payments?" To these people that have actually obviously just jumped out of the market or trying to jump out of the market, and they say, "Well, we can't. My asset valuation is going down. I haven't got the liquidity," and then that's where you get the struggle on your hands. So there's the to and froing which has occurred, and then we're sort of in this interesting phase of how low do you go. I'm not sure exactly where the point of which it returns, but usually I've heard that if you can sort of assess of where the bubble started, that's where it sort of finishes again. And the best indicators that I can sort of understand as of where the bubble started, if you just try and work out the ratio of where the average earnings of a citizen versus the value of the actual house is. Now, usually I find that if you can keep it to a range of about 3.5, that's fairly a reasonable range for a bank to give out a loan to rent out to somebody. But if it's further than that, you have obviously a lot more risky factors which can occur. So basically, there's that 3.5% just sort of covers all different things. Maybe that's probably assessing that you've got a partner, if your partner has kids, all those kind of things. There's plenty of factors that can come into account that give them that sort of that sort of idea of how much credit that they can allow to give you at a certain level of a rate as well of risk, implied risk. So if we're trying to return to the beginning of where China started, has to go to the start of the credit expansion. Now, I guess it's a little bit trickier with China because obviously, if you look at the very start of where China started, maybe they didn't have the same platform of the economy. There's obviously been a sizable increase in the economy as a whole, and all those kind of like factors in terms of productivity, the amount of jobs that have increased, the average earnings. So you can if you can assess of what the average earnings in China is over a certain period of time, how much has it increased with inflation, and then just combine that against, so if the percentage rate has only increased by about, so average wages have increased by 20%, yet the property market has increased by 200%, then you notice there's 180%. I don't know if that mathematics works out, but the ratio between the two levels potentially could indicate how much the market has changed now. Yeah, and how much the actual credit expansion has been kicking in. That's obviously, I don't know what the statistics are. I'm just plucking out figures out of the sky, but I'm pretty sure it's where, say, like the average sort of earnings to a house price should be around about 3.5%, 4%. I'm expecting that China should be somewhere in the region of 10 times. So that has got a long way to go down. And yeah, there's been certain indications as well of how the market's going. You look at the commodities market. So China's obviously the major sort of consumer of all the commodities, which in turn has knock-on effects for all different nations. I guess Australia is one of the sort of interesting ones there, because they have all the iron ore suppliers, vast amounts of materials which it's selling on, and seeing that they've chosen to have a huge infrastructure credit expansion, it's all of those goods that have been used. Now, obviously, if Australia has increased their production lines and all those kind of stuff to factor in basically the increased of demand for it, but not necessarily sort of improved their efficiency of extraction and things like that, then you have a lot of Australian companies, which I think is happening in the market right now, and that's why they're having a revaluation. Well, their currency is falling quite rapidly. When it was polarity, which was one to one versus the US dollar, now the Australian dollar's sitting around like 0.77, so it's having a fair whack of a drop. And these are sort of your indicators of how China is doing on a general, and these are always predeterminate sort of indicators as well. But it's very difficult to extract the information from China, and China's like one of those sort of things. It's going to be sort of it's hard to work out when things are going to go when a thing's going bad, and then when things are going incredibly bad, it's going to be very tricky to sort of determine when any sort of recovery or the green roots are sort of starting up again. So markets don't really like that, regardless of where they come from. They just want independent, sort of audited, what's going on, happening and stuff like that. They don't like government statistics, all those kind of things. They want a sort of a sensible chart, and then they can measure it, regardless if it's good information or bad information. The market can assess that properly and then price it in correctly. And they're much more happier to get information rather than the unknown, because the unknown just means, okay, well, I'm not going to put any of my money on the table because it's just too much risk for me to take. And that's one of the problems with China. They need to be far more transparent with the way that they provide results and all those kind of things. Even though this is probably the little segments of the communist government where they do hide statistics of all those kind of things, of how much food is being supplied to each citizen and all this kind of stuff, and how well they're doing. It's something a little bit ingrained in the government, and it's problematic. They'll need to find a way around it. I know that there's definitely improvements. They're trying to sort of beat down corruption. It has become a sort of a major topic for China over the years, but it's still needs more and more. It requires more and more sort of improvement of the way governments is run. I don't know whether, obviously, like sometimes when you look at these scenarios where they sort of get in somebody for corruption, maybe they just rubbed up people the wrong way. I guess a lot of corruption started where they've just taken a few too many bribes for different projects and all those kind of things. They've been a little bit flamboyant with it and all those kind of things. I think sometimes if you're in government, they'll probably just say, like, get away with what you can get away, but don't get caught. And I think a lot of those people have just been too flamboyant with what they've been caught out with and all those kind of stuff. The clever ones will always remain sort of covert, but governance is all about appearances. Anyway, that concludes the show. Thank you very much for listening. My apologies that you're getting this at a delayed rate. I still haven't even started creating the website and the podcast and everything else, but that should be on working fairly soon. Today it's the 7th of July. Yesterday's podcast was the 6th. So hopefully by this weekend we can get this up and running. So you're getting a bit of delayed news, but I guess it could be some sort of record for people in the future, people's opinions and all that kind of stuff. But yeah, it's been very nice to